show. Hey, Leventhal, early bird. Early bird gets the worm, as they say. What do you get? You get to join in a few seconds early and hear the wisdoms of Mike Rosehart live from his mouth. Everyone, let's leave this open for Q&A tonight. If you have any questions about real estate, stock market, what's been going on in the stock market, inflation, the general economy, whatever, shoot them in the comments below. Let's have a discussion on this stuff. But today I wanted to talk about something I was debating with my brother for a couple of hours. I was up to like 3:30 in the morning debating with my brother about all sorts of things philosophically. We touched on politics, economics, religion, all the things you're supposed to talk about in a healthy conversation, all the things you want to have a conversation about at work, but then you can't. But it kind of, we were discussing, what is the best sort of end state for humanity. And I think we're evolving. I want to talk about this a little bit before I dive into any of the, the house price stuff, before I jump into anything, but the stock market, it's been a wild ride. I've recovered almost all of my, on paper losses, not all of them, but most of them. Today was a big green day. And I've been taking a different approach to my options trading portfolio that's much lower risk. Like crypto holdings, like not crypto holdings, but the companies that I invested in that were investing in the crypto space did not do well in the last 3 weeks. They've been hammered really bad, especially the last 2 weeks. Then the last 5-6 days they've been kind of making a rally and coming back, and that's been awesome. But yeah, I've been my new strategy in options trading has been, I've been enjoying being really far out of the money, getting very little premium, but then when I annualize that on an ROI basis, I'm like, wow, I can buy companies at 20% discount, or the right to buy companies at 20% discount and get paid a 15-20% annualized ROI doing weeklies. And so that's been kind of interesting to look at that strategy. And I don't know if it's actually sustainable or how that plays out over a 30-year period. I haven't back tested any of it or looked at any data, but I'm like, geez, the way things are looking right now on down days, if you pick up really, really far out of the money puts, and then even sell some calls if you end up getting assigned, that strategy seems to outperform just holding. So, and it's a tax preferred strategy, which is huge, especially if you're trading that on something like the S&P 500. You could trade options on that if you wanted to, weeklies. And the worst case scenario is you end up owning some S&P 500 and you can just use calls to get rid of that position and be out of it in a week and get paid to get rid of your shares, right? So it's been interesting to kind of play around with that, but that's been my latest hobby pretty much lately. But let's talk about some things as far as real estate market update. What's been going on in the real estate world? So on the ground in London, I'm noticing the market's cooling. There have been several decent properties underpriced that were intentionally priced low that sold at asking price with one offer. Very interesting, I think, that the real estate market right now, whoa, almost knocked my table over. Sorry about that, guys. It's been interesting to me to see that the underpricing strategy doesn't seem to be working in the same way that it used to. There's just not a lot of showings, not a lot of offers, which is weird because, I mean, there are catalysts for a cooler market, one being a lockdown. We're in a full lockdown, so a lot of Toronto agents can't make the trip, aren't making the trip. There's also fears of inflation, which are kind of scaring people a little bit. You don't want to get into the rental business when your rents are fixed and your property taxes, utility costs, hydro, water, gas, internet, maintenance costs, everything are going up, and you can't pass those on to your customer, right? So the rental business is a terrible business to be in a high inflationary environment. You get priced out of profit really quick. So it's a scary thing when all your costs can rise, but you have rent control, and we can't raise our rent at all. It's zero for the last year during COVID, and after that, the years before that, it was like 1%. Some others don't raise the rent at all, and so very quickly your rental property investment becomes cash flow negative if it isn't already, which is not necessarily a bad thing. Like, you can have a few properties that you're owning as an asset class to diversify, looking for that long-term appreciation, a little bit of mortgage pay down. Okay, I get it. You could own a couple of properties. It shouldn't be your whole portfolio. If you're all in real estate, that might be a mistake, unless you're cycling through those properties and you're buying new stuff. That makes sense. Like, the acquisition of real estate and unlocking value makes sense. But anyway, I want to circle back before I get too deep into that. I want to circle back and talk about, we will circle back in a second too as well, and talk about month over month, what we're seeing in the real estate market, and then even weekly, what I'm seeing in the real estate market locally, because again, I'm a local expert. And then we can talk about year over year, because year over year, things are insanely up, right? Like real estate's up like 40% year over year. So like, if it's cooling, it's a lot cooler than it was last month. We'll talk about that in a second, but or year over year, it's still way up. So if you've been like, haven't been looking, and then you go and look, and it's been a year, you're like, wow, everything's on fire, you know, everything's way higher than it was. That's true, but we're actually not seeing an uptrend right now. That said, there are catalysts for further price ceilings. I think we could push new heights with the immigration plan that Trudeau's put together. I don't know how I feel about it, but from a real estate perspective, it's good. All the energy stocks rallied back today, someone said, yeah. Yeah, we've been seeing a bit of that. And even some of the value stocks have really been doing quite well as of recent. Even some of the financial stuff too has been doing quite well, where we've seen a bit of a rotation away from growth stocks not being valued as well. In a high inflation environment, actually, the growth stuff gets destroyed because the multiple on earnings is significantly reduced, and earnings haven't been increasing as much as price to earnings have been increasing. So the value people are placing on earnings, how many multiples they're willing to pay above the current earnings, has been increasing over time. That's what's been driving up prices. So I think it's safe to say it's possible that we have a major correction. I don't know what the catalyst would be for that. I don't know how that plays out, but don't lever yourself up too much. The same is true, although on the real estate side, I think as much leverage as you can possibly have wouldn't hurt, because they don't come knocking and calling. Whereas they will call you on the stock side, they won't on the real estate side. So the more debt you can have in a high inflationary environment, the better. Your asset class actually does better since you're levered through an inflationary environment. That's the only way to make money in real estate. The actual rental business that, you know, that's the cornerstone of how I started investing in real estate, that's dying here in London. There's just, it's not a very profitable business to be in. But the acquisition of properties under market value, hugely valuable. The assigning of contracts, again, in real estate, hugely valuable. The fix and flip, the renovating, the value add, all of that still works. Even with higher prices on construction materials and labor, the prices have passed on now to the end product, and so house prices are, you know, equally high. And so flipping still makes really good sense. It's a great business with a great return on capital. The buy and hold business, not so great. I do have a huge portfolio of buy and hold. Again, I'm speculating a little bit here, and I can afford to live without cash flow. I can afford to lever my properties up all the way and, you know, not need to draw from them, right? And so I can play that speculation game because I have large reserves. But I could see someone just getting started, you know, 1 or 2 properties could make sense. You can't do what I did before, where you could buy 10 or 20 properties and have this massive cash flow reserve. Now you've got a burr, and then the decision should typically be to sell. So it's like a flip, basically, not a burr. You get that huge lift, you can double your capital, double, triple your down payment after the full year of stabilization, then there's no point to hold. Anyway, I'm gonna circle back to what I wanted to talk about, which is a early retirement utopia. And I think that sort of exists, and I'd be curious to hear people's thoughts on a utopia that we could kind of build. But I would love to see like a country or a, you know, almost like its own island where early retirees could go, and we could all sort of live in harmony, and we'd be anti-consumeristic, and we would have certain tendencies. We're all out there to help each other, and we're just enjoying and living our best life. None of us have to work because we've all put in that, you know, I think everyone should have a choice. And this is where socialism kind of fails. You should have a choice. If you want to be a slave for 7 years and grind like an animal, you should then have the right to complete freedom. Socialism is more like a lottery where your full communism is like a lottery where you're given a job you probably don't like, and you have no choice but to work it at the hours they say forever, and everyone contributes to society, and everyone's supported kind of equally, and there's no disparity there. That kind of, you know, it basically assumes that people are equal. We're not. Humans are not equal producers of value. Some of us can produce at super high rates, some of us can't. Some of us could but don't want to. And, you know, I think the communists would tie the high producers to their best possible use of their talents and force them to do what was best for society, right? And that's not really right. That's not a good, happy society to live in, right? In the same way, though, our current capitalist society, you know, while I have found a way to maneuver through it and gamify it a little bit and use it to my advantage, I mean, I'm basically exploiting capitalism and our current system to unlock early retirement in like 5 years, and anyone can do it. Like anyone who doesn't want to work in 5 years can make a plan, stick to it, live frugally, and build a fund that then produces passive income to cover their whole lifestyle. Like no one has to work in this current system unless they choose to overspend. And so that's sort of an interesting one, right? I throw that on socialists. I'm like, we could all be self-sufficient. You could force a savings rate on every Canadian and force a job on every Canadian who wants it. And everyone would be fired in 10 years if they wanted to. And he's like, well, no, we should all have a right to Starbucks and a right. And I'm like, whoa. You're a communist. Like, slow down. No one has a right to anything, right? Like, I think you have a right to, basic, the right to live. Like, no one can murder you. The right to, basic shelter. You should have the right to the opportunity to provide for yourself. And if so, it can't, you can't provide for yourself, someone in your family should try to help you, or maybe there should be some safety net there for those people who are like completely, mentally retarded or something that can't do anything in society. Those people, someone needs to help them. But by and large, like 95% of the population should be out there working. Like there's some shadow stats that say like 20% of the population doesn't work. If you include like students, and you include like the people who've been unemployed so long that they're not in the employment statistics. Like after a year of looking for work, if you haven't found work, you're not even in the unemployment statistics. So that 9% we're talking about in some places is not even the real unemployment. Those are the people that are still looking recently for work. The people who are just unemployed by choice or by by circumstance or whatever, by bad mindset. That's a big thing too, right? Like in a perfect utopian society, we would have a lot of social connectedness and social what's the word I want to use this basically you have a system of people that would be there to support you, right? And that's like the number one determining factor of depression, is a bad social support network, right? We need that. And that's part of a utopian society, that we have those connections, that we do those things we love, those hobbies, and we're not isolated. Like today's social media and even the gaming platforms that exist that suck people in, they create these psychoses, these depressions, and it's just very sad. And I don't know. I just think I don't know what the best social structure we could create is for the ultimate human happiness, but I think maybe it's a pessimistic view, but I honestly believe we aren't all equal. Like all humans don't fit in a circle. Like some of us are a square peg in a triangle, and we don't all fit in the same slots. And so when you create one system for all, it just doesn't work. I think there are general rules like, not murdering each other, or like, sex trafficking children. Those are things that are like, okay, no, everyone agrees that's totally wrong, right? We should have rules against those things. And like long-term destruction of the planet and basic things like that. I think we should have those rules, but then I believe we should be pretty much free to kind of do what we want with our lives. And the problem with that is that there are always a top half that do better. They have more, they live better lives. And then the bottom half of, however you sort it, you can measure it by different stats. Financial's one of them, but it's not the only one. Like you can measure other indexes for, overall social connectedness, overall life satisfaction. There are many metrics you can look at. Some of them are like, are you doing things you love? Do you have good social, strong ties to friends and family and people in your community that they value you, that you value, right? And having those constructive conversations, and all of those things are what make a good life. That's a happy life. And I think at the center of the FIRE movement, at the Financial Independence Retiring Early movement, is this idea that we're all chasing that ideal life for ourselves. And it's different for everyone. For some people, it's super lean, and it's like I know people that spend $1,500 to $1,800 a month backpacking around the world, and they're super happy living in low cost of living areas. They're traveling the world. They work very remotely on a computer, a couple hours a day. It's a very relaxed lifestyle. They're happy. Then I know people who spend $150,000 a year who are also really happy with the lifestyle they've built. And so it's to each their own. You can't say that like this one way is like this amount of money is enough to live on, or this lifestyle is the right for you. Everyone has a different goal, right? Some people want to work 100 hours a week. Some people want to work 2 hours a week. I know people that could never hold a full-time job. They're just not built that way. They can't go to bed for 8 hours, wake up and go to a job. They're dysfunctional. And those people will fit in society somewhere, but they don't fit into the perfect mold of like the 9 to 5 worker, or whatever. So yeah, I think a utopian society should exist where everyone should have the right to kind of do whatever they want within reason. And I don't know, I think that's we'll talk about that in a second. I saw someone talk about some paths to early retirement. There's lots of paths to early retirement, and it basically involves the 3 levers that I talk about in every single video, right? Around what you're spending, what you're currently earning, and your side hustles, and then maximizing the returns on the difference between those two. Once you start to get on that track record and start to build something, then you've got to start worrying about what you do with that capital that you've kind of created, right? You'll create value somewhere, you'll try not to spend it all, then you'll take that capital that's left over, you'll save it, and then you'll invest it. And then what you invest in is only important once you've amassed a decent amount of a nest egg. In the beginning, it's really all about, can you earn more than you can spend? Can you crank down the savings rate? Can you find ways to live for less? Can you live the same middle-class lifestyle for half? And the answer is yes, like 100% yes. I could challenge anyone here to cut their spending in half. They could do it and live a good life, like by pretty much all terms, a top 10% life. And so that's one of the challenges. If you want early retirement, you want to be part of this utopia, and this this group of people who are living their best lives, that means some sacrifice. Like nothing's for free. Nothing comes without some hard work and some sacrifice. Like there will be people who jump on and say like, okay, well, I don't want to work hard, so early retirement's not for me. I think a better path would be if I got money for free from somewhere. And I'm like, well, you can't have your cake and eat it too, right? Like you've got to contribute to society, and you've got to provide value to society, whether that's in small increments over a long period of time, or that's in a whole bunch at the beginning of the journey, and then you live off the fruits of those labors. It's your choice. That's the beautiful thing, is we're humans born with a choice, and we can do whatever we want. We can choose whatever path we'd like, and it's all about mindset. Like it's so important to set yourself up to think through things from the right perspective, the right lens, right? Okay, let's do some Q&A. Like the Q&A always drives the conversation here. So let's see what you guys are thinking. So someone put in here and said, why are apartment rates going through the roof right now? Probably because real estate prices are at all-time highs. So I would say probably, it depends on which city you're looking at, but by and large, interest rates are at all-time lows, which drive valuations to all-time highs. In addition, the underlying assets are driven to all-time highs. So just like there's price to earnings on a stock, how many multiple times of earnings the stock is trading for. And the same is true in real estate. There's cap rates, and the cap rates are at all-time lows. People are paying multiple premiums way over what they were previously for the same earnings from a rental property. So that's why prices are driven to all-time highs. Part of that is the super low interest rate environment that we're in right now, super low return environment. That's why people are flocking to growth stocks, because there just wasn't a lot of growth, right? And that fueled an artificial, growth, I think, in some senses. But at the same time, there's also a supply and demand crisis in real estate that's driven prices to all-time highs, right? Like we have more people wanting to immigrate into developed nations like Canada, certain places in the US, where people, like, especially in Canada, where there's an influx of immigration. And at the same time, there's COVID, which we've been in now for a year and a quarter now, I think. Since the first cases in February, we're like almost at a year and a quarter of being in full lockdown here in Canada. Like, I can't remember a time when construction was moving smoothly for well over a year now. Builds are delayed, taking longer. Materials are impossible to get. Excuse me. It's one of those things that's kind of driven. When supply goes way down and demand goes way up, what happens? Prices rise, right? So supply just isn't able to catch up right now because cities are not making it easy to build right now, and everyone's in COVID lockdown, so they got an excuse to delay projects. And the more delays, the less housing supply exists. Less housing supply, all the people who are in demand of housing then have to bid more for that same house, so, or building or whatever, right? So it should drive rents up. In addition to that, we've printed 30 to 40% of the entire money supply in the last 18 months, and that has also put a lot of money in the hands of people. And when you put money in the hands of people, what do? They spend it. For the most part, people spend it. Unfortunately, they don't save it. They don't invest it. Some do. The top quarter tend to really invest that. And so the printing of the money has made them wealthier than they've ever been, which again is creating some problems in the current income inequality and wealth distribution inequality that exists in North America. But at the same time, when you put the money in the hands of people who are just going to spend it, well, then they drive the price of things up, right? We get inflation. And inflation is bad for a lot of businesses, but it is also good for certain sectors and businesses. And price of real estate is a function of all of those economic things coming together, right? What countries are you considering moving to and why? Dylan asks. Appreciation opportunities in Colombian real estate. Well, I don't know anything about Colombian real estate, but as far as countries to live in, there are many great countries. No Bad Capitalist on Instagram, I follow them. A friend recommended. Some people in the audience have shared with me and recommended No Bad Capitalist. He talks about some of the great countries to live in the world. There are, and I guess his catchphrase is like, go where you're treated best. He believes that you should be able to just go and live in a country where you're treated best, right? Like as an example, if Canada talks about a 70% tax rate, which again, I believe government is, I don't mind paying tax and supporting the people in society who genuinely need it. And I'm all for a healthcare system that supports, and an education system that supports people who grew up like me with nothing and allows them to climb the ladder in socioeconomic status. I'm about that. At the same time, I see the abuses of that system and I see how many people are taking advantage of it. And I see at the same time the inefficiency in government. I see that it takes the government $10 to get the same thing that private could get done for $2. And it just drives me up the wall to watch them squander dollars inefficiently. So that's my biggest beef with paying a lot of tax. But beyond that, I think that it makes a lot of sense for people like myself who will eventually leave Canada. I can see the writing on the wall. I see we're moving towards a socialist nation where they want to basically just take from everyone who's a high producer and basically just force them into slavery to support all the people who don't want to work. And that's a scary, proposition. I love Canada, and I was born here, and I have a lot of family here and stuff, and I have good social ties here. At the same time, I could live a great life in Costa Rica, in Puerto Rico, in Florida, in some of the red states in the U.S. where there's a lot more freedom to do whatever you want, basically. There's not that restrictive. I'll stop there. But there's other places too in South America you could live where places like Vietnam, if you like the culture there, where it's extremely low cost of living. From a tax haven perspective, there's always like the Bahamas or the Cayman Islands, or there's a whole bunch of places you could go where there's tax efficiency. For me, it's about going somewhere where my family will be safe, where I like the culture. I tend to like the Spanish vibe. It just seems more relaxed than the other vibes. I don't know though. I'd have to spend some time in somewhere like the issue with Puerto Rico. The benefit of Puerto Rico is that it's part of the U.S., but one of the cons is that it's on an island that experiences a ton of bad weather, hurricane stuff, right? Whereas in the mid of Costa Rica, you wouldn't have those issues, right? You might have a rainy season, but you're not going to have those same risks. And being on an island is kind of risky. Like if a big hurricane blew up like it did a few years ago and you're stuck on an island, you can't get out, that's no good either, right? So from a safety perspective, I don't know if I ever want to just be on an island where there's risks of major hurricanes and things. So there are pros and cons to many different countries and places to live, and I don't know where I'll end up at the end of the day, but I could definitely see, I wish there was a country that was like, and this is interesting because I made a video actually of countries that are pro-FIRE, financial independence, retiring early, and pro-early retirement movement. And Canada's actually up in the top 10 in the world for supporting early retirements. If you believe in a frugal lifestyle, if you believe, and you're looking at a lower income, Canada's amazing. You can make $100,000 a year between a couple, completely tax-free on Canadian eligible dividends. So companies that are Canadian eligible and paying dividends out, completely tax-free. And you have free healthcare on top of that, free roads, free property taxes, free libraries, a ton of social programs that are paid for by the government. We are a very socialist country, and you can make $100,000 a year off your early retirement portfolio in Canada and live a great life. Our primary residence is tax-free too, so you can get all that appreciation tax-free. There's just so many great things about the the Canadian setup, right? And so if you're making low income, if you're like 80% of people that retire early on less than $2 million a year, Canada's the ultimate place to be, right? I think it has, Vancouver as an example, There are areas in BC that have amazing weather year round. And again, you could just travel. Like, you could be in Canada 7 months a year, and the cold 5 months, you could go travel somewhere and come back. You still be a Canadian citizen, still have free healthcare, all the benefits of being Canadian, and pay no tax. So Canada is actually a tax haven for most early retirees. I'd be looking to leave because, again, my long-term plan will be, 8 figures in earnings, 7, 8 figures a year in earnings. And is that, greedy? It's a function of who I am. Like, I'm a high producer. Just over time, high producers end up accumulating mass amounts of wealth. And so it just is what it is. My original goal to be in Canada and live on less than 100 grand a year, I'm now getting to a point where it'd be impossible. I'd have to be a terrible investor to get that kind of return on my capital. And so then I'm torn. I got to go somewhere where I'm treated better. Unfortunately, Canada does not treat its elite or its high producers very well from a tax treatment perspective. It's better actually being a country where I pay for my own healthcare. I get a better quality of healthcare, and to be honest, because I'd have a bunch of money, I'd be treated like a king, right? And is that fair? Is that right? I don't know. If you're looking for a luxurious fire, the tax-free places like like Puerto Rico are fantastic. There are other places that are even better with zero taxes. When will you do a full portfolio reveal like Kevin or Graham? The Beeves want to know. I haven't shared my net worth on this channel since I became a millionaire. And that was I've been a millionaire 4 years, more than that. I don't want people to know exactly what I have. I like, my net worth is somewhere between 1 and 20 million. That's what I'll say. I'm not going to say what it is. I don't want people to know exactly what I have. I like the right to privacy in the same way. Although Matt McKeever did a good video, actually, that it was a while ago. I just tuned into it for a minute, but he did a video where he broke down his net worth as a percentage of what he was investing in and didn't give actual raw dollars. He just gave allocations of each asset. I would do something like that. That's cool. I have to sit down and prepare it, but yeah, do I still have, someone just put in, do I still have the mining rigs? Yeah, so I don't move till July 16th. I sell this house. And when this house closes, I have nowhere to put all my mining rigs. So I have to sell the mining rigs that I have off. So follow me on Instagram at Mike Rosehart if you're interested in buying that mining business off me. I'm still working on building it. I still have some more lines and some more cards. So I'm still building up what I have, but it's a sweet business. Like, you could easily mine $10,000, $12,000 a month with the hardware that I will have shortly set up. Before, when Ethereum was a much better price point, it was $20,000, $30,000 a month you could mine just in your basement if you had enough power circuits. You'd need like seven different circuits you have to put it on, so 15 amp circuits. If you had a 20 amp circuit, like a kitchen plug, then you could probably get 2 rigs on a 20 amp plug fairly safely without any risk of fire, and then 1 rig on a 15 amp plug if you just had lights going on it. So follow me on Instagram. I'll share some more about that, and I'll be pricing it closer to July when I've got everything put together. And it was a cool little project, and I will pick it up again. Like, I'll probably, if the person wants to, I'll buy back the equipment in September when I close on my new place. Towards the end of September, I'll be setting up another mining project. This was sort of a little experiment. I'm going to blow it up in a big way. I think in October, my plan is to allocate $500,000 to, maybe even $1 million, to mining and to crypto. And I think mining is a great way to get into the crypto space because your downside risk is super low. The return on graphics cards, on hardware, like, you basically build a little computer rig. Like, you buy a motherboard, you buy a CPU, you buy an SSD, you buy a couple of power supplies, and you plug in a bunch of graphics cards, and you hook into a mining pool, and you process transactions. You could sell your compute power to engineering firms and architecture firms and do compute jobs, or you can mine crypto. My preference is crypto because, again, I think every Ethereum token that I mine, or you can mine Bitcoin or whatever, there's lots of different tokens you can mine. But every one you mine, it may only be worth $2,000 a coin, $3,000 a coin now, but I could easily see it being worth triple. So every coin I mine, I'm like, yeah, I'm mining, let's say you're mining $20,000 a month right now, which would be a relatively small crypto operation. Wouldn't take a lot of capital to do that. That might be 20,000 now, but if you hold on to those tokens in 5 years, I think you'll look back and you'll be like, wow, I mined actually $100,000 a month in in crypto back then, so I would not want to spend it. But that's my way of getting into crypto. I like it better than buying because the return on the hardware is about 150% annualized, between 100 and 150% annualized. There are some risks, some costs. I've talked about it on my YouTube channel, and I've talked about it on my Instagram a lot more about some of the costs, right? Like there's hydro costs, which again are around 10 to 12% of overall revenue mined. You lose about that in hydro costs. You can fix in your hydro. There are programs you can fix in here in Ontario to lower your hydro costs, so it's not time of use. It's the same price all the time. That's what I've done on my house. There's going to be hardware costs, so depreciation of the equipment. Ideally, you can sell the equipment after 2-3 years for the same price if you take good care of it and you dust it frequently and you don't run it too hard. Keep the settings on on a reasonable. Overclocking. Don't go too crazy. Don't underpower it, or don't go too crazy with what be conservative with your setup and build it for longevity. But yeah, I mean, there's part failure. Like I had this other night, if you're watching during the power outage, I had a battery go on my motherboard. Basically the motherboard's toast. Had a riser fail connecting to one of my GPU cards. I've had a power supply from China completely gone, $500 gone, just throw it in the garbage, no warranty. So you do have stuff that goes bad too, like that's part of the business. You're gonna have labor costs to set it up and build it. I hired someone, and I have a guy who's sort of my employee that works on maintaining my rigs for me and all that, to help me keep it as passive as possible. But yeah, I think honestly, like I honestly think in end of September, October 1st, I'm hoping that Ethereum is still kind of at a low price point, and I hope the demand for cards is down, so that I can pick up a whole bunch of different rigs off people and be in a position to dump, say even dump $500,000 into a mining operation. I could easily mine $1 million in crypto a year on a $500,000 investment at current rates, right? So the downside risk is crypto doesn't do well, and so you get your money back, and then you sell your rigs for what you bought them for. Maybe you paid scalper prices. The current market prices for everything, it's just insane, right? Especially with the chip shortage we're dealing with right now, with EV cars wanting the same chips. There's definitely some of that risk, I think, with buying the parts for a little bit higher price. Again, I've just been buying because my thought was better to have the stuff in mind. By the time I wait for the parts for 6 months, I could have already mined the whole cost of the card, right? So it's been a great use of capital, very, very stable, very safe, because you can, again, sell those cards off to gamers. There's lots of different exit strategies if mining doesn't make sense. I think long-term, there'll be compute jobs that I'll be doing. As the Kudos platform opens up, I think that'll be, and architecture firms and engineering firms will be selling their rendering and their heavy processing stuff. They'll be farming it out. And so that'll be a whole business in and of itself. So I think there's ways to pivot with the equipment, but I see it as a huge opportunity, a huge business that I'm interested in investing in. I'm not betting the farm. Like for me, I'm putting a very small percentage of, this is all money that I can afford to lose. Doesn't mean anything to me. I'm not telling you to put all your money into this because, again, anything could happen. You don't have proper insurance. Your rigs could burn down. Whatever. You could make a mistake and not plug it in properly or whatever, and catch on fire, and it could be garbage, right? So there's risk with this, and crypto could go to zero. I mean, there are floors, I think, for now that institutional investors are on board and use cases for Ethereum especially. I think there are certain floors to the pricing, but yeah, I mean, anything can happen, right? So don't bet the farm on it. I think crypto should be a play in your portfolio. I love blockchain technology. I've always liked it. I'm just trying to find ways to invest into it. I just don't know if, and another thing that I love about cryptocurrency is proof of stake. You can lend out your crypto holdings. If you're holding gold, and like a Bitcoin performs a lot like a digital version of gold, and there is actually a digital version of gold that you can hold that is staked, like that is tied to real gold. And it's a safer investment, I think, than Bitcoin. But with Bitcoin, you can lend that out, right? You can convert to another alt currency or alt token and lend that out as a staking, right? And you basically you still own it if it appreciates in price, and you get cash flow from that. Whereas gold produces nothing. You hold on to gold, you get a price appreciation. It's the greater fool. That's it. You got to sell it to someone else for more than you bought it for. The greater fool strategy, which is cool. Like that has worked with humans for a long time, and it is a store of value, so it probably will go up in value. But I like cash flow too, and so I like the other things I love about it too are that you can transact. I could go to China and transact with someone in Ethereum or Bitcoin or whatever. I mean, not China because they've banned Bitcoin, but most countries in the world, you really could, if you wanted to, still transact with someone from a factory in China using Bitcoin. Whereas if you have Canadian dollars, you have to convert to another currency, and you guys have to. There's currency costs to do that, right? And so it's nice to do business in a global. Like I actually think it's a big risk factor for crypto, for a global cryptocurrency backed by the central banks. Like if everyone got together and said, hey, let's make a global currency that we can see the ledger on. I mean, everything's an open ledger, but like imagine that they could track everything, right? That would be something I could see coming on board. I could see each country having their own. We already have digital fiat, but a digital fiat on the blockchain. So it operates in the exact same way as a cryptocurrency would, just the government's now tracking and watching all of it and can tax it and can control the supply on it. A lot of tokens, people do burn, and they do issuances as well. And so there are, I definitely could see the government continuing to control the supply. And that's one of the biggest risk factors. So that's one thing I like about, say, Bitcoin, is that there's a limited supply of it, but who knows what the next crypto could be. With tech, we know that a great tech company could become nothing. It's all about user adoption. And right now, the user adoption is really giving it a lot of strength because people believe in it. It has value. I was skeptical of Bitcoin in 2017 when it was 20,000 a coin. I was like, this feels like an overvaluation. It could be worth nothing. It went down to $3,000 shortly after I wrote that article on my blog in 2017. And I actually considered buying a large portion of Bitcoin just before COVID at like 4,000 a coin or something. And I was like, should I buy 10 coins just like for 40 grand? It wouldn't be much. Just put it aside and see what happens. I'm like, who knows? It could go down to 2,000 and I could buy it a little bit cheaper. And so I just waited. And here I am, right? You can't time the market. You can't predict the future. Who knows where the price of Bitcoin will be? Again, I'm a bit bullish on it, but I can see the other side too, where people say, hey, it has, if someone makes a better Bitcoin that does all the same things and has, and imagine it got the same user adoption, all of a sudden Bitcoin has a rival and it's, again, no longer of as much value. Whereas gold, it has utility value that will be there forever. You can't create another gold, where you can create another altcoin that could do the exact same thing and eventually get the same user adoption levels and the same institutional backing, foreseeably. So I don't know. I do like the use cases where I really like that no one can take it from you. Like the bank could just decide tomorrow they're insolvent and sorry, your account's frozen, or the CRA could come in and decide, hey, we're gonna impose a 90% tax on everyone right now. And they just take all your money, right? The bank could do that, the government could do that. In the crypto world, imagine even not that I ever want to do this, but child support as an example, or alimony, or someone wants to try to take you for something, or steal from you, or they hold you at gunpoint to try to get money from you, or whatever. There's just so many ways you could lose the fiat dollar where you can't in crypto. They could literally, imagine if you stole $10 million from a bank and put it in crypto. If you put it in a cold storage wallet that only you have the passcodes to, it's literally offline, no one can get it. They can't crack it. There's nothing they can do. Only you've memorized the code to get into it. They could lock you in jail, whatever. They can't get it. But in a bank account, they could take it. If it's cash, they can find it and take it. Whereas even if they found the storage on crypto, they can't take it from you. So there's some value to that in a sort of apocalyptic sort of world where there's like a 1984 and the government comes in to sort of seize all assets. Not that I think that will happen, but there's always a chance. Oh yeah, someone just jumped in. Fiat does mean just regular dollars. Sorry. The fiat dollar is like the Canadian dollar, the US dollar. Any fiat, it's just money the government's printed, right? Backed by nothing. It's not backed by gold anymore. It's backed by the country says it has value. And as long as people perceive that it has value, it has value. If they print 50% more supply of that dollar, theoretically, it should decrease 50% in value. That isn't happening right now. That is happening. They're printing that much, 20, 30, 40% in some cases of the entire money supply in the last 18 months. Has the dollar gone down that much in value? Officially, no. But it's interesting when if you typically it'd be pegged to the GDP of a nation, right? The gross domestic product of a nation. So if a nation is economy is growing, at 5-10% a year or something to that effect, then they could print 5 or 10% more money supply, and the dollar would be worth the same because the country is stronger. It has strong fundamentals and assets, and it's producing well, et cetera, so forth. Then that would make sense. But when a country's economic outlook is negative and it's actually we have high unemployment, the GDP is down, everything's doing badly, and they print more money supply, well, what should happen is the devaluation of the dollar. And we are seeing that in some senses, people think, relative to hard assets, like cryptocurrencies or land or copper, lumber, gold, silver, whatever. Those things relative to fiat, like the gold hasn't changed, but the price in fiat has changed because they're printing so much money. The value of that dollar is going down relative to the hard asset, which is finite in the amount that exists. So something to think about. I don't know. I like to be diversified. I like to be aware of these sort of doomsday events. Not that I think that they're going to happen. I just, again, yeah. Someone says don't get dementia. I like that. That comment there was a good one. I think the way to protect yourself is there are a series of codes that you could most definitely store in a vault somewhere underground that would give you emergency access that maybe would trigger, that would help you trigger the password. You could have it so that you can unlock it with those codes, or you can have those codes that give you, you can have some secret questions and answers and stuff. You can customize it so that only you can get into it, but then you have fail safes set up. And I think it's important to have those set up, especially if you're in an offline cold storage wallet. I don't currently have one set up, but I would like to get one set up. So yeah, I bought one. I just gotta initialize it. I do believe that that's a good emergency. Same way I think you should have some gold and silver. Like I have some gold and silver that I keep for worst case scenarios. Not that I think it'll happen. If it doesn't, if nothing happens, great. I hope the economy keeps chugging along. I hope they get the money supply and inflation issues under control. I hope that we continue to grow, and I want to see that for humanity. I don't want to see a doomsday event, but at the same time, it's like insurance. Like I don't want to get in a car accident, but could happen. I mean, I don't get struck by lightning, but could happen. I think it's more likely to have a meltdown than get struck by lightning. I think it's more likely even to have a meltdown than get in a car accident. So that's like my insurance. And I think everyone should have a little bit of insurance, and diversity is key. So spread your assets out into many different asset classes. Let's go to the Q&A again and keep going. You guys always drive the questions, and that's what I like. Someone jumped in and said, British Virgin Islands, Cayman Islands, high cost of living, but no taxes. There you go. Ideally, you could find a low tax and low cost of living area. That's the ideal. Mr. Frugal says, hi Mike, any resources you can recommend to learn about cash flow and real estate markets in the US? Probably the best place you could go is biggerpockets.com. That is the place to go for real estate investing. On those forums, you will find answers to everything, where the best cap rates are, the best places to invest, et cetera, so forth. If you find some good red states to invest in that have great landlord rules, where you can raise rents arbitrarily, where you can, you have the power to kick out an abusive bad tenant, where you can have a bit of, where it's, if you have a good tenant, you can keep them and they pay fair market rent and there's good cap rates. That's a place where that's a good climate to invest in. So if you find those places, let me know. I'm looking to, at some point when I get the time, divest a couple of my properties here that are, I think, overvalued relative to the cash flow that I'm getting. Do an owner-occupy scenario. I think that they're rightly valued, but to someone like me looking to rent them out, it doesn't make sense. For someone who wants to manage the property themselves, it can make sense. For someone who wants to outsource it, it's too much work and stress for the amount of money that I make. And so I have some properties like that I'd like to divest, and I'd like to move that capital somewhere else. So it's something I'm looking into, not super aggressively, but at some point I will 100% get into doing that. Next question up was, every utopia is bound to fail due to human nature. I don't know. It's a pessimistic view on humanity. I agree. I agree, though. I think humans, we really are not great at living in peace. We really thrive on growth and conflict. And inequality is the nature of who we are. You can't equalize unequal things. It's just not fair. And then it creates further issues. So that's just the nature of life. But there should be bans, I think. And the disparity right now is larger than it should be. I'm okay with abolishing billionaires. I think if you make it to a billion, I seen a great Instagram story the other day that resonated well with me. If you make it to a billion, you should get a park named after you or a city named after you and a plaque. And anything after $1 billion that you earn should be donated to healthcare, education, philanthropy activities. I think you should, the billionaire, should get control over how that money's deployed. But I don't see a need to have more than $1 billion. Why would anyone need more than $1 billion? You can make sure your friends and family and everyone around you can get to that point, but what do you need more than $1 billion for? What do you need 250 billion for? Like I'm full capitalist, but I think if you get to $1 billion, you've won the game. Like you're good. You've maxed out every level. It's like you've beat the game. You're good. At this point now, focus on changing the world. Doing good. And so I think that all money after that point, like if I get to $1 billion in my life, which is probably inevitable at the rate of inflation and growth over the next 50 years. At that point, I would like to donate anything past $1 billion. 999 million should go to philanthropy. Couldn't get that word out. I think those types of activities are what's good for society. Like I want to focus on education, on healthcare, on those things that society needs. Like if we just put all that extra capital for those 1,000 billionaires out there, if we just took all that excess capital and deployed it to those who are really suffering and helped them with programs that actually benefited society as a whole. We take those people who are struggling, who have mental illness and depression, and we solve their problems and we get them working and producing for society. They feel good. They're socially connected. They're better connected with society, and society's better as a whole. We all benefit from that. The net of dragging the bottom up to a closer band is good for everyone. Now, I think that it should be a free market up to $1 billion. Like you should be able to, if you make $1 million a year or $10 million a year, I think that I believe in a free market. I think that trying to restrict people actually slows down societal growth. I want to see us become an interplanetary species. I want to see us become our max potential. And communism and socialism don't take humanity to the heights that humanity really can reach. People don't, without the right incentives, people don't push. They don't advance society to the levels that they could and should. So that's just my opinion. It's been changed. I've evolved a ton of times. You would have never heard Mike Rosehart say a year ago that I think that there should be no billionaires. But I kind of feel like anything more than $1 billion is excess. And at that point, all money should go 100% into something that billionaire can control and work at, but it has to be philanthropy type activities where you're actually benefiting society, and that's your thing, your mark on the world, and you can control that. You could have 10 billion in a fund that is focused on solving healthcare issues or educational issues or poverty issues, whatever. But yeah, I kind of believe, and you don't have to manage it yourself if you don't want to. Okay, but no, like $1 billion is so much money, and anything more than that is just, you don't need it. Honestly, anything more than 10 million, I don't think really has any measurable life impacts, but it's a fun scoreboard to keep going. And I get why people want to keep growing, and why I even want to keep growing towards $1 billion is because I love the game, and I like challenging myself to. It's like when I used to play World of Warcraft or any other video game that I used to play, I wanted to be the best at that, and that's probably based on my insecurities in my childhood, and like they say competition comes from that kind of stuff, but I don't know, I want to be my best self. And I think money is a scoreboard for success in business. Like people vote with their wallets for the most part, right? On whatever product or service you're offering, right? If no one's willing to pay for it, then it's probably shit. Chances are. So I don't know who this guy is, but all right. Next question. Mindset kills people. Very difficult for some to escape their own mental barriers. Very true, William. That's a great comment. I like that one a lot. It is mindset. I've watched people change their mindset and go from making $20,000 a year to $100,000, $150,000 a year, just in a change of mindset. Small changes in habits can make big differences in the long term. And most of the issues we have in, with poverty in this country are a direct result of bad mindset and bad choices. I would like to see more opportunities to lift people out of those situations, because again, it's an echo chamber of people around them that have bad mentalities. And I grew up in poverty in Sarnia. I grew up with that. Like, I had a stepdad who was like big time druggie and all the stuff. Like, I went through all that bullshit I had SWAT raid my house when I was a kid. When I was like 10. I've been through all that crap as a kid. And I don't want to talk about that drama, but like seeing how the bottom 10% of people live, I know that it's mentality. And a lot of the people are actually super resourceful. Like, a lot of the people in poverty are super resourceful, good business people that just don't have great habits or great mindsets or great support networks. And so I would love to see more opportunity to, I got a super chat. Cool. So Michael says, Mike, would you recommend private lending for purchase to buy Bitcoin and secure against it? So are you talking about lending to someone so they can buy Bitcoin? No. Do not lend to buy against Bitcoin. The volatility in cryptocurrency is insanely high. One day it could be down 30%, which means you could lose 30% on your investment. I would definitely not do lending against crypto. So that's just my personal opinion. The risk is very, very high. By the way, thank you for the super chat. If you super chat, you get your comment answered first. That's the rule. At the same time, though, do I think you could throw a little bit of your money aside into some different altcoins and some of the cryptocurrencies that you really like and the projects that you believe are going to be awesome long term? Yeah, I think it should be part of your investment portfolio. Like, it's high risk, high volatility, but 10 years from now, you'll be thankful that you did. 5 years from now, you'll be thankful that you put a little bit aside into that in your portfolio. And it's part of a diverse portfolio. Do I think it should be half your portfolio? No, I don't think it should be half your portfolio. I think you should be very conservative and spread it out into many different asset classes. Don't put it all in crypto. I'm putting a very small percentage of my wealth into cryptocurrency. It's money I can afford to lose. That should be what you gamble with. It's an investment, but again, any high volatility, high risk investment has inherent downsides. And so would I lend against it? No. If I'm going to do lending, would I lend? So I would if I owned crypto, I would stake it. That makes sense. You're basically lending it out to provide liquidity, right? Or to verify transactions. That makes sense. You can get in some if you're willing to take the risk and hold these insanely volatile and risky altcoins, there are some cryptocurrencies that pay 200% APY for you to stake your coins with them. There's some that even pay 1,000% annual to just lend your coin out to the exchange, or lend your coin out for proof of staking. And so, I mean, you could do that. You could pull it out as soon as you get your money back and then just let all your profit ride. I know people that do that and they take that risk with little bits of money. Don't bet the whole farm on it. But yeah, I mean, that's a cool way to do some sort of lending, basically. It's like mining, but, or it's like lending and mining kind of combined. That's a cool way to invest. If I want to do a low risk investment, I do a first mortgage on a property. That's the safest thing you can do, with a corporate guarantee and a personal guarantee on that person, ideally their spouse as well, and the property on title. And you do your due diligence on that person. You make sure they have considerable assets, and you make sure they have a good credit score, both of them. And you make sure they have strong social ties and strong community ties so they aren't a flight risk. And you make sure that the property that you're lending on is appraised well and that you're considerably under the current value. So if you have to, if the person defaults and you have to foreclose on the property, you're getting the property at pennies on the dollar. That's important. Whenever I do any lending against real estate, that's what I looked for, is how am I gonna get my money back when they don't pay? I'm getting a great return. Let's say I'm getting 12%, whatever. Cool. But what happens when they don't pay? Because there's gonna be a time when they don't pay. What happens then? What can you take? And so if you have security on the property and you're in first position on the mortgage at 75% of the value, or you're lending to someone who's got a great brand, a great net worth, a good credit score, those are all good factors in lending. If an A-lender bank would lend to the person, they're probably someone you'd want to lend to, because the banks scrutinize quite well these days in Canada. And so if A lenders are, giving them mortgages still, and they just got a mortgage recently, that's pretty much like, I'm good to go to lend to that person in most cases. Again, I will say though, I think the banks focus on income over assets, and that's a problem. They should focus on assets over income. You could lose your job tomorrow, but it's hard to lose millions of dollars. So yeah, cool. I'm gonna keep going with the questions here and try to wrap this stream up a little bit and get caught up. The US is the type of utopia in which people could do whatever they want. It's just that people prefer stuff over freedom. And it's interesting when you dig into that a little bit deeper, like that statement, I like that, and I think that's true on the surface. But if you dig a little bit deeper and you pull back, the covers a little bit, and you look at, the capitalist marketing machine that is changing culture, that is changing the way people think and perceive life. We've seen a service economy where people my age and, like millennials, they focus on outsourcing everything. Whereas in previous generations, like you'd get home from work and you'd cut your grass and you'd fix your own house, then you'd clean your own house, you'd do your laundry, you'd cook your own dinner. Like people didn't eat out more than once a month. Now people eat out twice a day. We eat out 60 times more than we used to 50 years ago. And people wonder why we can't, everyone's like, why am I living paycheck to paycheck? My grandfather never did. It's like, your grandfather did everything himself. He didn't outsource his grass cutting. He didn't have a house cleaner. He most certainly did not have Uber Eats. They made their own food. They did their own dishes. They didn't spend at the same way that they did before. And, that's why they were able to save more, right? I actually like the previous generations more because of the mentality they had around frugality and saving. That said, I enjoy the modern luxuries. I like having, all the services that we have today. And I love the internet. And I love that, as a society, we've advanced and have way more amenities than we did before. That comes at a cost. Like, if you want to enjoy all these new amenities, you walk through the worst area of town, and like the gangsters got the brand new, latest and greatest iPhone. I have an old iPhone 8 that I still have. And I'm like, I could afford a bazillion iPhones, right? But I still have the old iPhone 8, right? I walk down the street in the worst areas of town with the poorest people, and they got Jordans on, and the newest $500 jeans, and a chain, and a brand new phone, and they've got the latest and greatest tech, and they're wasting their money on stuff, and they think they need that to be happy, and then they complain they don't have money for food, right? And it's really, disheartening to see the cultural shift away from saving and investing for the future and focusing on being in the early retirement extreme. One of my favorite books that I read when I was 17, and it got me started on this journey, written by Jacob Lundfisker. I went down to Chicago and actually stayed with him for a weekend. It was great. I have a signed original copy, and I'm super proud of getting to spend time with him. And he's the ultimate frugal. Him and his wife own like $1,000-something a month in Chicago. They're super frugal, and he like grows his own food, and like his house is super chilly. But anyway, I'm not trying to throw shade, because I think his way of lifestyle makes him happy, right? But at the same time, I feel like I gotta put my kids to bed here in a sec, so I'll try to wrap this up. But I like to talk philosophy, and I like to talk, anyway, in his book, he talks about being a Renaissance man or woman. And we used to fix our own cars. We used to, fix stuff ourselves. Now we outsource everything. And that is a cost. And we complain we have no money and that the cost of living is so high. No, the cost of luxuries is high. You just want to have your cake and eat it too. If you want those luxuries, you have to work harder than you did before. You have to save. In order to save, you have to earn more, right? Or you have to pare back on the luxuries. That's easier to do, actually, is to live a little more frugally. Like, don't go to Starbucks and spend $7 every day. That's $300 a month. If you invest that over your life, that's $1 million. People wonder why they get to 65 and they have no money. I'm like, well, look at how you lived your life. It was unintentional consequences. I want to circle back, because it's unintentional consequences that have unintentional results that people don't like. They don't like the result. And then all they need to do is just shift their behaviors. Small behaviors make big differences. Cut out Starbucks as an example. You cut out little things like Uber Eats. Cut it out. And go to the bar. Cut it out. Go to the bar and bring a flask. Go less. Have people over to your house. Go to their house and do it more affordably. You can still have the same joys, maybe even more enjoyment, by having those same social interactions in a more cost-effective environment. And if you do that for a short period of time, you sacrifice for that time, the net benefit and the overall amount you're ahead is huge because it compounds, right? And that's the idea behind FIRE. And I wish that more people would sort of get on the bandwagon with this, and more people are, thankfully. More millennials than ever are keyword searching frugality, early retirement, et cetera, so forth. I wish I still had time to keyword my videos, right? Exactly, pre-drink. And so, I mean, or don't drink at all, right? Like, you know, have a drink and that's it. You only need one drink to be happy. You don't need 20 drinks. It's excessive. Do it once or twice, but like, if you do that a lot, it's not good for your mental psyche, not good for your body. You'll be much less satisfied in life by doing those types of things repeatedly. If you talk to people who've done a lot of that, typically it's regret. So try not to do those things, right? And your life will be better for it. Your future self's gonna thank you. Okay, I'm gonna try to pick like 5. There's so many questions. I'm gonna try to go through these really quick. By the way, if I don't get all your questions done and I miss your question, just copy and paste the question into the comments after the video and I'll go back and check it out. FI is hard in larger cities. Most people just don't like the idea of getting off the treadmill and working to find the best deals or not buying the newest, latest, and greatest tech or iPhone. Agree, William. It's a mindset shift and it needs to be widespread for people to jump onto it, right? It's hard to go counterculture. We as humans like to follow the social norms and it's hard to be different. That's why you have to surround yourself with a community, with social connectedness to people who are about that, who are living that better life. And you know, the research shows those people are happier than the people who are in an endless treadmill consuming. It's hard to break the cycle. And it's profitable for the companies that are trying to force that culture onto you, right? Through, you know, marketing and, you know, planting and media and social media, etc. It's very hard to break that culture that becomes ingrained. Nicholas says, hey Mike, just wanted to say thank you for all your videos. It's been incredibly impactful for my life. And the reason I'm on Lean Fire at 22, I never thought it'd be possible. Nicholas, that's awesome. This is the kind of stuff that I love to hear. These are the kind of comments that I love. I wish I could screenshot this live here. I wish you put this in the comments after so I can share that. Because that's the kind of stuff that's what I want out of this channel. That was the reason I started this channel, was to get people like you onto that. And it's honestly the best. There's nothing better than that. Myron says, crash coming soon. Maybe. Possible. A dip, a correction, a buying opportunity. Should a beginner DIY the rehab projects or should they hire it out to build the skill of delegating? Even things like painting. Seems like a lot of successful investors say delegate. I think, Alex, your first projects, when you don't have a lot of capital and you don't have a lot of experience, you should work alongside all of your trades. Bring people in to paint with you, paint with them to learn. Bring your plumber in, plumb with them. Bring your flooring guy in, you cut the floor, he lays. You take a turn laying, he cuts. That's how I learned the trades, was hiring people on my projects and working with them. It reduces cost. It teaches you what to know about construction, so then you can delegate effectively on future projects. So your first few, I think you should always get your hands dirty and get involved and understand the construction. It reduces your cost in the beginning when you need capital. It helps you to preserve capital to get you doing more deals faster and get you on that snowball faster. But at a certain point, your time is too valuable to be doing those kinds of tasks. And so like, I'd never be caught dead with a drill in my hand now, because that's low value work compared to if I was focusing on finding off-market properties or doing constructive financing or that kind of high-level value stuff. I can make $1,000, $5,000 an hour, right? So it's better use of my time. At a certain point, though, as you elevate along the chain, I think if you don't have those previous steps done, it's hard to delegate a construction project effectively if you don't understand construction. If you've never been through one before, you'll get taken by the contractors. Longer timelines, higher budgets, it won't go well. So I think a piece of it is being actively involved in the beginning of the journey. Hopefully that helps. Someone put this in the comments at like 63 minutes, 64 minutes. That's a great tidbit, that minute, for someone just getting started as a real estate investor. Hi, Mike. Thank you for your videos and sharing your knowledge. What do you think about inflation and how do you prepare and hedge yourself, and advice to others? Well, one of the best things you can do to combat inflation is to, I think clearly the best way to get through inflation should be to focus on businesses that can pass inflation costs on. That's number one. So own asset classes that are pass inflation on to the consumer. So like Facebook can pass that on to their advertisers, no big deal. Subway can pass most of that on. depending on the price elasticity, will someone pay for a $10 footlong? Mostly they can pass that stuff on. The other thing too is leverage. You most definitely want to borrow as much money as you can from all the banks. You want mortgages on all your properties, because as inflation creeps up, like if you look at, Germany in the 50s, or the inflation issues they went through, is the 30s maybe. Mortgages went to be worth nothing. So all the money you borrowed, you now own an asset that's appreciating in value, but the debt stays the same. So if a house was worth 100,000, we go through hyperinflation, it's now 300,000 for the same house, but your mortgage is still stuck at 50,000. So now your mortgage is very small. So you actually want debt. That's the best thing you can do to go through a inflation crisis, is have a lot of debt. So long as you can hold the assets and service the debt is good. I think it's better to save the debt if you're gonna buy in the stock market, save your leverage and save that debt capacity for the dips. I use leverage to buy the dips. So I use my money to hold stocks, but then I lever up when there's dips. And then you're buying with bank money or brokerage money when it's significantly undervalued. And then you pay that leverage back as soon as you're up. Should a beginner DIY? We answered that question. We did this question here too. Appreciate all your videos. Thank you. Thank you for the comment. Appreciate that. Debating joining REIA. What are your thoughts about them? I don't know a ton about them, but I don't know how much it costs to join, but being part of networking groups is good. There are a ton of free ones, I'll say that. There are a lot of free networking events that are awesome. You need to surround yourself with a community of people doing what you want to do. You will be the average of the 5 people you surround yourself with, and the people you idolize and that you look up to. That's who you'll become. So surround yourself with the right influences. I truly believe that. Mike, what about a second home in Japan? My understanding is 500,000 farming houses outside of Tokyo are going for 50K and need around 150K rehab. Also, Portugal is very early retirement friendly. One challenge in Japan, I have a friend who's from Japan, and he shares with me some information here and there. A challenge is that in Japan, people tend to just tear down. Like, properties tend to depreciate over time. There isn't appreciation there. As a property gets older, they just tear down and build again. The land tends, there's just not appreciation. The interest rate environment is super low. So I don't think there's a lot of long-term appreciation from being in that market in Japan. So I would stay out of that market. That's just me. But I don't know enough about it beyond just talking to some people in that market to really have an educated opinion. But my understanding is appreciation in Japan has been zero over a 10-year period. So they have population issues. You want a growing population, a growing young population. They have an old, declining population. So as there's more supply and less demand, real estate is less and less valuable. So it really comes down to looking at some of the demographics and the immigration and population trends within that country. Canada has very favorable trends, which is why I still hold Canadian real estate, because I know we're allowing another 1.5 million Canadians for the next 5 years into Canada through immigration. And that's going to bring a ton of capital and a ton of people. We need to house those million people. Where are we going to house them? We have a housing crisis now, right? And no one can build anything because Canada's in a lockdown. So what's going to happen to the price of Canadian housing? Probably keep going with inflation. The price will keep rising. Rents won't rise that much. Maybe new market rents might rise a little bit, but if you currently have a place rented, like, good luck getting the rents up. We're in a rent-controlled environment. But yeah, I gotta go, guys. Almost 70 minutes here, and I started the stream late tonight. Wow, Christian, that's aggressive. He put half his net worth into Bitcoin, and he still has it all. Wow, that was in hindsight, in retrospect, that was a great decision. It might not be if Bitcoin goes down to 5,000, but I think there's probably a floor of like 20,000 a coin now, so you're probably okay. There's a lot of institutional heat on Bitcoin now, and a lot of capital that's really created a bottom where the bottom feeders go in and continue to buy. So there's a floor now, I think, that's much higher for Bitcoin than it was before. But yeah, the bands are huge. I could see Bitcoin between 250,000, by some of the BTC bulls, and 20,000, right? So there's a huge variation there of what the intrinsic value is, right? And intrinsic value, again, is mostly based on the network, on the number of nodes in the network. Someone I really like to listen to is what's her name, Lynn. Lynn Aldridge, I think is her name. She has some great stuff that I like to listen to. She's super quick, super smart, and I value her opinions. A bunch of great stuff here. I'll try to pick one or two questions. Will real estate always go up in value? Well, over the long term, as long as a country is desirable to live in, yes. That if there was an exodus of people from Canada, as an example, imagine a nuclear reactor, melted and we had a spillage in Ontario, and the water and the land wasn't very nice. Real estate not valuable in Ontario anymore. Or imagine another situation where Canada imposes an 80% tax rate and no one wants to live in Canada anymore. And there's an exodus of people from Canada. All the jobs leave with the wealthy people who own all the companies because they don't want to pay the tax. And it becomes a depressed nation that no one wants to live in with a ton of debt. In that situation, real estate's not desirable. If there's a lot of people who are going to immigrate and live there and like the country and the country's doing well, the real estate market is a function of that country's overall success. So in a lot of ways, you're betting on the country when you invest in real estate in that place. So if you invest in Zimbabwe real estate, I mean, you're taking a risk. Is the government going to seize your land? Who knows? Is the land worth anything? Does anyone even live there? So it's a supply and demand curve that you have to look at as well. There's so many factors that come into play when you're trying to decide where to invest, but there are some good places to invest in the US, in the Midwest, that I wished I've been saying for 6 months I got to get in there, and I just haven't got around to it. But there are some great places with great cap rates I'd like to see, I'd like to invest in and go check out. Besides stocks and value of rental properties, what investing vehicles would you consider for young people with a net worth of between 250 and 500,000? Mr. Frugal, I think that there's lots of different asset classes that you can invest into. I don't like bonds, so I hate bonds. I think that in the environment we're in now, you're going to lose money investing in bonds. It's not a safe place to park your money. So I don't have bonds in my portfolio at all. 100% equities, but I substitute bonds for cash flowing real estate and lending primarily. I like lending. I feel safer going 70% loan to value on a Canadian piece of real estate, a quality piece of property that produces cash flow, than I do buying a treasury bill. Because I think it's more likely the government's going to fail, or we're going to have massive inflation on those treasury bill face values when I get money back, than with real estate having a 30% or more correction before it loses the dollar. So and I can make, instead of 1%, I can make 12% with lending. So it's 12x the return for a similar risk level. So I look for low risk, high reward, or at least a high reward relative to the risk that I'm taking. That's the important thing. But buying businesses is a great way to get involved in. There's you could build businesses or invest in side hustles with your capital, like things like crypto mining or wholesaling, or lots of different little businesses you can invest in. There's marketing, there's Amazon, FBA, all that kind of stuff, and Shopify that you can do and invest your capital in and get great returns. Investing in local businesses too is a great way. Real estate, of course, cryptocurrencies, and lots of other different public equities that you can invest in as well. So yeah, spread a little bit out everywhere. I think that's the key. Don't put all your eggs in one basket, unless of course you have a competitive advantage in that one area. Like in real estate, I had a competitive advantage. I was buying, at one point in London in 2019, I was buying the most properties of anyone in London. Of the 500,000 people in London, I was buying the most triplex and under. I did 58 properties in 1 year. I was buying more than anyone. There was no one doing more than what I was doing. And because I had that monopoly, that I was buying all the properties, at like 70 cents on the dollar, I couldn't lever it up, right? I'm getting a 30% return on closing, 5-1, so that's 150% return on my money the minute I close. There was nothing I could buy at that low of a risk level that gave that kind of return. So I put all my money in real estate because I had that competitive advantage. That was because I was investing my time to find off-market leads, and we basically had a business that I was investing my capital into. That made sense. That's why I didn't invest in public equities. I no longer want to put that kind of effort in here in London, and those opportunities aren't as strong as they were then. Market conditions have changed. It might come back, who knows? We had a 10-year period in Ontario where, like Toronto, from 1990 to 2000, house prices were flat. There was no appreciation for a decade, nothing, zero. So you could buy a house for $500,000 and it was worth $500,000 after 10 years, unless you renovated it, in which case you get your renovation money back, maybe and a little bit more if you're lucky. You can make some money on your time that you put into renovating. But it's just not as, we could go back into a cycle like that. I don't know. I think the immigration plan that Trudeau's laid out, if he wins again, and it comes to fruition, that will create a supply and demand issue that will push real estate prices higher. Inflation will also push, single family home prices higher as well. So there are catalysts for a rising price further. We may not be at the top yet. It could go another 50% higher. I don't know. It's a likely scenario. We could also see a 5%, 10% dip, which is what we're seeing right now, actually. There's a 5% dip in London month over month right now. Houses are selling for 5% less this month. Just wait for the data to come out. I can tell you already, I've already been talking to people on the ground, but we're down 5% month over month. That's huge. That's a 60% annualized drop if you were to annualize what we're seeing in London, right? So anyway, I gotta wrap this up. I've been on this for 80 minutes, and if you guys are getting value, smash the like button. We've had like 100 people in the stream and only 14 likes. Like, come on, guys, you can do better. A like is like a clap. It's a polite thing to do when you listen to someone speak on a stage. You clap after, right? So just even midstream, hit that like button. Thank you guys, appreciate it. I really appreciate all the likes. I wish I had a tree farm right now. I don't even know what a tree farm is. I think you're talking about a crypto farm. Consumer staples have already gone up in price. Maybe you actually mean tree farm because the price of commodities have been rising at all-time highs. Maybe I should mean the lumber and the apples or whatever. Lumber's at like 500%, right? Let's answer most of these questions actually. I did pretty good today. Mentality is the only limitation. What did you do in your former corporate job? Christian asks. So I worked out when I graduated from Ivy with my degree in finance. I originally had a job at KPMG in accounting, and I transferred over into tax, and then decided I didn't want to take that offer in tax, and I left, and I went and worked in consulting for a company, and I worked 3 years for that company. 3 years with that company. I started as an analyst. I got promoted to senior analyst in my second year, and then I got promoted to manager, and we started a small division that I helped found and head up with a VP there. So it was a bunch of fast-paced work, hard days. I was a top performer. I got promoted every year because I was a top performer. I wore the knee pads. I put in the work, and what did I get out of it? In my best year, $60,000. I think I made $62,000 with my bonus in my best year, because I chose London over Toronto. I knew that I was getting 30% less pay to be in a market like London, but the cost of living was so low here that it made up for it, and I can invest in real estate on the side, and that's what I did. Over those 3 years, I acquired 16 properties. Before I left, I had almost 18 properties under contract when I left that job, and I had just turned 24 after 3 years in consulting. I'm now going to be 29 this year. So I've actually been not working longer than I was working in a full-time capacity. But that said, I worked from 17, almost a full-time job, all through school. I worked at the border. I was working 30, 40 hours a week throughout school. I've just been a grinder, right, since I was 17. So I put in what I call my 7.5 years of grind, and that's how I unlocked Lean Fire. And I was like a millionaire, but I wasn't, ultra rich. I was enough that I could survive and support, my family. I had my first daughter at that time. I have 3 kids now, but I had 1 when I Lean Fired, and the plan was just to have 1, maybe 2, but life happens. Here I am. So hopefully that helps you, gain a better grasp of, my background. Now I'm an entrepreneur. I don't need to work. I could just take my foot off the gas and be just fine, but I enjoy it. I enjoy pushing myself to new heights, new limits, and I think there's nothing wrong with that. It's, in most cases, healthy. All right, everyone, I gotta go. It's been a great 80 minutes. I've really enjoyed it. Thank you for the 30 likes that we now have. If you're still watching, you haven't smashed that like button, shame on you. Give it a little clap. Smash that little like button. It'll turn blue when you hit it. And leave a comment. If you're watching the replay right now, if you're one of the 2,000 people that'll watch this replay over the next week, please leave a comment. It means a lot to me. I read every single comment, even if I don't heart it. I usually heart them, but if I don't heart it, I definitely read all the comments. And follow me on Instagram. At Mike Rosehart on Instagram. I share stories daily there. Some of the stuff I share is super controversial about the vid. Some of what I share is just jokes, and some of what I share is what I'm seeing in the marketplace, what I'm doing, what I'm up to. So if you want to follow along on my journey, join me on Instagram. That's the platform to follow me on. And I'll see you next week. Like the rain always comes, the sun always rises. Mike Rosehart always streams every Wednesday for well over 3 years. We're gonna come up on 4 years next March, I think. My first ever interesting fact for those just still watching, hanging out, my first ever Mike Rosehart show was called, I think it was like Mad Money Mondays, and I grabbed Stefan over at my house, and we did the live together. So my first ever live stream, my weekly show, was kicked off with Graham Stefan before he was a big shot, and yeah, it's been a good ride ever since. You guys keep tuning in, so I'll keep coming every week, rain or shine, holiday or not, vacation or not. I'll be here, live streaming from my phone, answer any questions you guys have. Yeah, so if I missed your question, Lynn Alden, someone said. Maybe I had the name wrong when I was talking about that analyst. Yeah, if I missed any of your questions, I'm sorry I missed it. Put it in the comments and I'll manually respond to it. Now I outsource management. I used to do it myself. Yeah, all of it was done myself up until like 2 years ago, I would say. So yeah, it's been a good ride, and thank you all so much for watching. Remember, the secret to unlocking a wealthier you is to spend less, earn more, and maximize returns on the difference. Bye everyone, we'll see you next week.